Let's go to best performing asset of 2022. What do you got, Chima?
This is simple. This will be battery metals, lithium, nickel, cobalt, graphite. Put them in a basket.
Welcome back to Rockstock Channel, and thanks for checking in. Before we launch into the interview, we'd like to thank all our Patreon sponsors. And for those of you who are new, share a bit about us. RK Equity is an advisory firm run by Rodney Hooper and me, Howard Klein. We are exclusively focused on raising awareness about companies producing or developing the next generation critical raw materials that are powering Tesla's EV battery energy transition. Please register your email at rkequity.com and follow Rodney and me on LinkedIn and Twitter. Please also subscribe to this channel, Rockstock Channel on YouTube, as well as Lithium Ion Rocks on SoundCloud for our podcasts. Please note, Rodney and me are not financial advisors or broker-dealers. Nothing you hear in this video is investment advice. Please do your own research and read the disclaimer at the end of this video or on our website. Thanks again for the support, and let's get into the video.
Now it is Sunday, January 2nd. Happy New Year, Rodney. Rodney, you wrote at the beginning of 2021, that 2021 is going to be lithium's year. You're very much right on that. And I think a title for this year would be 2022, lithium's year again. If we look at the scoreboard here, go green, equities follow a 3 to 5 times rise in lithium chemical and spodumene prices. The emerging projects on our scoreboard on average returned 283%, but there were several 10 baggers, including Sayona and Lake Resources, among others. And there were 9 emerging projects that reached US dollar, billion-dollar market caps, so what I call unicorn status during the year, including Lithium Americas, Liontown, AVZ, Standard Lithium, Ioneer, Lake, Vulcan, Sigma, and Piedmont. We've been keeping track of all equity raises, and we counted and added up about $7.5 billion. We'd encourage you to look at the appendix of our recent note for the full list of all of those raises. And there was very significant, buoyant M&A and joint ventures. We've added to the scoreboard a category here of emerging projects, which have the involvement of large diversified companies. So CATL is involved with Pilbara and AVZ in Africa and Australia. Rio Tinto bought an asset in Argentina at the end of the year for $825 million. West Farmers, of course, has been involved with SQM. Schlumberger is in Nevada with Pure Energy. Zijin Mining in China bought Neolithium. Wayu Cobalt is buying Prospect Resources in Zimbabwe. Czech Utility is partnered with EMH in the Czech Republic. Sibanye Stillwater is with Keliber in Finland and in Ioneer in Nevada. Galp has announced that they are going to participate with Northvolt in building a lithium refiner. Lanxess is partnered with Standard Lithium. Aramet is advancing their DLE project in Argentina with China's Tsingshan, and Compass Minerals announced in August or July, their Utah DLE brine is advancing hopefully to production by 2025. On the emerging developer scoreboard, these are all pure plays now on one page. We've added a column here for estimated net cash, which shows all the cash balances. If you remember, about 18 months ago at the bottom of COVID, at the beginning of COVID, at the bottom of the lithium market, I highlighted the cash balances of many companies was, extremely low. So the balance sheets of these companies are much well supported, on the back of rising lithium prices and the enormous demand. But there's still, if you look at all these companies, Lithium Americas, Liontown, AVZ, their cash balances are still far below the amount of cash that will be needed to advance their projects, but their market caps are also now at a place where they can raise that in not too dilutive a fashion. So I encourage you all to, look carefully at this long list. Lithium is not rare. You could see there's no shortage of lithium hopefuls here at various stages of development on the scoreboard, but I'll stop talking about the scoreboard specifically for now, and bring Rodney into help make sense of what were some of the highlights as the year ended, and more importantly, what are you thinking going into 2022?
EV sales in 2021 outperformed pretty much everyone's expectation, but in reaching the 6 point whatever million that it'll end the year on, people need to understand that all of the inventory that was built up in the oversupply era between 2018 and let's call it the first half of 2020 was drawn down and utilized, and that was lithium chemicals and spodumene concentrate, and was used up in achieving the 6 point whatever million it is that we're going to finish on for last year. As we go into 2022, you've got Tesla gearing up to produce a lot more. They've got Berlin and Texas about to come online. You've had all the other major OEMs committing and trying to get a foothold into the EV market. So we're likely to see, let's call it, 30% up on EV sales for this year. But if people have listened closely to what the incumbent producers have said in recent earnings calls, is they are, for all intents and purposes, out of working inventory. So in order to meet the demand, the EV demand in 2022, you're going to need to utilize prompt, immediate delivery and supply of lithium. There is no inventory to draw down on. That's going to mean that it's going to be hypersensitive supply and demand on how successfully new projects come online. Even being relatively generous on that front, in my opinion, based on my estimates, you are going to see a shortage of somewhere between 31,000 and 50,000 tons LCE of battery grade undersupply. What that does to prices, we'll have to see. We've seen what it did last year on a similar sort of number, maybe slightly higher, but a similar number. And it really is going to be difficult because, I've mentioned in the past, OEMs always treated EVs as some kind of a sideshow, but now that they've committed to an EV future, who can accept non-delivery of materials and battery cells and not actually make the EV cells? It's going to be very difficult. So it's likely, on the basis of that shortage, that the prices go one way and that way is up. Again, I fundamentally disagree with those that are calling for a flattening of a price and then possibly a lowering or whatever else. The only way to do that is for supply to exceed demand. And again, looking purely at the installed battery capacity, etc., is incorrect. You've got to look at how much cathode is produced, because if a cathode is produced, it needs lithium to go in it, and you've got to factor in production scrappage at the cell level. You've got to factor in some losses in cathode clippings, etc., on cell production. Then there's inventory, logistics, shipping, etc. So I think they've got the numbers wrong. If you look at it purely on that basis, yes, I understand that there is some excess in inventory, but the reality is those units have to come from somewhere, and they are not available. So, as you always like to tell me, commodity equities follow commodity prices, and I cannot see any way but up for lithium based on that shortage and the fact that downstream it's a non-negotiable that they get those units, because if you do not sell EVs, you've sold your board and your shareholders on the basis that you are now going to be an EV company. And that's the sort of global mandate from a carbon emissions perspective. So it's all systems go for 2022, of course, on the basis that the price doesn't fall and continues to rise, given that there's a shortage. What are the projects that OEMs and others will have to turn to, given that incumbents are fully sold out and cannot take any further orders? To my mind, I think the ones that have feasibility studies, the ones that can be easily permitted, the ones that can be put in production. You know, China has spare capacity. All you need is the spodumene. I think we're going to see a sort of pickup in conventional projects and the demand for those. And I think we'll see, you know, we saw a different equity market in 2021 in terms of what shares rallied and what didn't. But I think the structural deficit that's unavoidable from 2022 onwards, we're in it now. Now you need your lithium units yesterday. What do you turn to? I can't help but feel that you're going to turn to the safest and quickest route to production, and that'll be conventional projects.
There's been a lot of M&A activity. There's been a lot of capital raising activity, and there've been a fair bit of offtake agreements signed as well. Some with money, some a lot not with money. But at the end of the year, you had Rio Tinto buying Rincon, right, which is in DLE in Argentina for $825 million. They bought this from a private equity group, Sentient. I've known this asset and I've known Sentient for a long time. They were a busted PE fund, with had 4 funds, not great performance. But this was like a big win or salvaging, of one investment, that they had there. But this happened right on the back of, Rio's problems in Serbia, with Yadar, but Rio had opportunities to buy a big stake from Nutrien in SQM a few years ago. They had an opportunity. They were in the auction process when Tangxi was selling a bit of Greenbushes. In both of those cases, those were minority investments, much bigger size. Rio has a new CEO since January of this year, Jacob Stossholm, but what really stands out in my mind is about 15 months ago, they could have participated and bought Altura, for replacement value, $200 million right in their Western Australia backyard, a conventional hard rock. And they didn't, right? And Pilbara did. And one of the reasons for the high prices is Pilbara's discipline with Altura, in mothballing it, as well as, mineral resources in Albemarle not producing from there. But maybe it's because there was a different CEO. Maybe they had dreams, on the Yadar. But for Rio to go into Argentina, a country they're not currently operating in, this company operates in many countries, but they're not in Argentina. They don't have, DLE. They don't have brine expertise. They might have some other flow sheet. They've been spending a lot of time with Yadar, $250 million of R&D expenditure, but it just seems a very odd first investment. But like, why? Also put things in perspective, $825 million is equivalent to only 4% of Rio Tinto's first half EBITDA. So they're minting money in iron ore, just to kind of put things into perspective, how much money they're making there. Rio is very active in the aluminum business in Quebec, right? There's a bunch of aluminum smelters in Quebec. Why didn't they buy Altura? Why aren't they actively investing in Quebec, or might they in the future? Like, why do you think that they came into this? Was a big surprise, right? Is it a big positive for DLE? Is it a big this is a low ppm brine, relatively, high magnesium, or has DLE's day come, right? And now this is how Rio's ahead of the game.
Look, it's a big resource. So I think that must have flagged it. You raise a good point. I think the only thing, and we discussed it with Altura, is that Altura is non-integrated, which means you would have had to have some downstream conversion, either constructing it in some other place or doing it. So they might have had a reluctance to do that, but it was a more logical choice to look at hard rock closer to home. So, it would be interesting to hear the motivation on this, but it will be also interesting to see timelines, because if you remember, they were talking about Jadar only getting up and running and hitting nameplate in 2029. I think they didn't provide a time frame in their press release. Unlike actually Aramet,
when Tsingshan kind of came in, remember they mothballed that DLE project, but when Tsingshan came in, they said they're going to finance the CapEx of $375 million for 49% to build 24,000 tons by 2024. And then POSCO made an announcement on their Sol de Vida with their POS-LX technology. They're investing $830 million for 25,000 tons of hydroxide by first half of 2024. So there you have like three. I think POSCO is DLE, certainly Rincon, and Tsingshan, and Aramet, deal is. So, these are outsiders coming into the lithium industry.
Look, what's interesting is where outsiders are going and where insiders are going. So if you look at Albemarle, they bought into Wodgina, they bought conversion capacity in China, and they've got conversion capacity in Australia. SQM, Covalence, hard rock, hydroxide, I'm assuming conventional in Oz, Livent, Namaska, probably shifting back to a more traditional flow sheet and expanding their existing operations. Ganfeng, Goulamina buying hard rock in Mali, look to buy conventional Millennial. They did do Bacanora, that's a slight twist. But in general, if you look at what the incumbents are doing, the incumbents are sticking to more of a tried and tested formula in order to get their units. They obviously have the luxury in certain instances, like SQM doing brownfield expansion and Albemarle doing brownfield as well on theirs with the Atacama, and then we'll see in terms of Australia and then China with the hard rock. So the newcomers taking a slightly different and alternative route. Again, I can't help but feel that looking at history, the timing on this, the unconventional, the time horizon in which they get up and running and qualified is, I think, going to be quite a lot longer than what the incumbents are aiming for. But the incumbents are obviously signing contracts and doing deals and making commitments and probably going to get good pricing. But they always, they have management limitations and how many projects they can take on. But by and large, they've gone for the traditional. I think part of the thing with Rio's is with Canada is you don't have a sort of Wodgina-sized or Greenbushes-sized deposit there yet. So, we've had this conversation, Rio's prints an unbelievable amount of money. What sort of size and scale of assets do you need to buy in order to move the needle? So it's got to be pretty big. So they've gone for that. I'm sure that's not the last of what they will do. Now that EV battery metals is a theme, and I think despite some PR that they're trying to push and what have you, when it went to the referendum, that really was the end, and that project looks to be done.
I agree with you. I don't think Rio is done, right? They, for a variety of reasons, Ken Brinsden said it on our podcast, both BHP and Rio are going to need to be in these, green commodities kind of going forward. Rio has invested a lot of time understanding lithium. They're playing around with their California tailings, but they're minting cash still in iron ore. And like I said, this was a very small amount of money. That is the right type of player, to apply their minds. But it just was really sticking in my mind, like, why Argentina, why Brian, why not, Hard Rock? Okay, they may have missed Altura under a different CEO. The aluminum business in the world, Canada is a very significant portion of it, and a very significant portion of that is in Quebec. And there are the movement to green aluminum, right, is happening, right, on the LME. And so I see a lot of parallels, or some parallels. I mean, I've often compared it to iron ore, but I'm seeing parallels into the aluminum business. And if you look where Rio has very, very substantive aluminum assets in Quebec, because of low cost hydroelectricity. right? So, and why wouldn't they understand spodumene and conversion?
I think if somebody were to discover, or you had a deposit of something of 100 to 200 million tons in Canada, I think they would definitely have a hard look.
Okay, well, if you add them up, right, they can. There's going to be a lot of consolidation in the industry. I think a lot of the M&A activity that we've seen. To Emily Hirsch made the comment, like Argentina had a lot of things for sale. I think in Millennial's case and Lithium's case, yeah, in Aramit's case.
But again, these are, this is Argentina's open to China, and these were projects that had well-established, feasibility studies. So they weren't discovered, a couple of years ago. These have been around.
Yes, but importantly, they were up for sale. Right. So they had processes where there were willing sellers. I don't think a lot of the players in Canada are ready to sell. Right. In Piedmont's case, in North Carolina, in Lithium America's case, with Thacker Pass, Ioneer was willing to partner, but like an outright sale. Right. And there are some permitting questions in the US, which are not, and even in Canada and in Europe, which are, hats off actually to Argentina, however difficult Argentina is, to do business, they are permitting mines. So that's another aspect. So willing sellers plus, ability to permit, availability. Again, Rincon was in a process, Sentient was seeking bids. And the same was true of Prospect Resources. They hired bankers to run a process. They were looking, we could do JV, we could look acquisition. And in their statement, they basically said this was the best reward for shareholders. Zimbabwe is, a complicated place. So, I think that's why going back to 2022 being Lithium's year again, I really believe we're still just getting started, right? This is not at all, over. And some of the best, most advanced projects are holding out. It's revenge of the miners. They're going to get even better deals, in my opinion.
And I'm saying I agree, Howard, because I think people have got the maths wrong again. And when they understand that we're in a structural deficit, then M&A, there's only one way to immediate and near-term production, and that's M&A. We know how long it takes to discover, build up a resource, then a feasibility, then permitting, then funding and construction and qualification. There's only one way to bypass that 10-year, whatever it is, time horizon, is to go for something that's done a number of years already down the track. For China, what they will be scouring the earth is either going for the carbonate in Argentina, or they will definitely be on the lookout now for hard rock. Obviously, Africa is accepting for them as partners and buyers, but they will be looking for obviously other alternatives where people are prepared to sell into China. How that goes, obviously, we saw some not the greatest contractual support during the downtime, but there is immediate and willing buyers in China that I think Ken showed it in with some Pilbara presentations in the last while about how there's all that margin that can now the share of the spoils can now pivot back to the spodumene producers. So there's still a lot of, the reality is if spot prices are 40 plus, you can comfortably absorb, a very high spodumene. Literally, you can be making 80 to 90% margins.
That's iron ore like margins right now. So
yes,
why
exactly.
wouldn't Rio Tinto buy up, critical elements, right? And ship spodumene to China. That critical elements can make tons of money, on spodumene, or buy Atlantic Lithium, right? Or the other half of Firefinch. You're absolutely right. The spodumene to China route is very profitable.
It's there's spare capacity in China. It's already done. The reality is, and people keep twisting and turning, and yes, you're going to build conversion capacity elsewhere, but it comes at a different price. But fundamentally, from being approved to being constructed, you can have a converter up and running in China in a year, whereas you can't elsewhere. So, and there is spare capacity existing. We've seen Albemarle do a deal. Will someone else ferret out some more? Will there be tolling? How will it be done? But if you remember, there was, China rushed out and built quite a bit of it, and now these new producers are trying to find material to put through it. So I think you can negotiate, very good terms. And if Chinese converters are prepared to operate on a 15% margin, operating margin, then you can get, if you look back on some of the, research and graphs I've put out, you can get a very high spodumene price, based on those formulas. So, one doesn't have to commit forever. You can, sell to China for a window of time. And then when other converters are available to compete in Europe or the US or wherever they may come, or even Australia, you keep it on shore, then re-switch. But yes, I think the margins are there, and depending on how long it lasts, I'm sure we're going to see a lot more names and listing, like we're already seeing, in the spodumene, segment of the scorecard.
Yeah, I have to look more carefully at it, but there were, we mentioned last month, I think, green technologies, and Winsome Resources, two Quebec exploration plays, and then this Manitoba play, Snow Lake, listed in the US. You're seeing it reflected in Sigma's valuation. That we mentioned them as a unicorn, and they raised significant amounts of money, including from BlackRock in the upsized capital raise. How high do you think prices can go? I mean, you're talking the middle of last year that 18 to 20 was possible. We're now talking 40.
But again, this is the big debate, how it is, what is the price? Because I've just shown you what SQM's been getting, and right. We know that they and Orocobre don't get anywhere near the spot price. So I know Benchmark, I saw something recently on their pricing, they were talking about the carbonate price being 27. So I guess that's the sort of total average versus 42 spot. So when you say how high can prices go, I'm interested to see how the pricing cycle matures for the very big producer like SQM, which is a big percentage of the market, and Orocobre and even Albemarle, in terms of, and our friend Matt Fernley published it and showed the differential in contract pricing going to South Korea versus spot. So if those contract prices and those those freight disclose, yes, there can be transfer pricing somewhere in the mix. But I guess the point being is LFP's prices cathode prices and cell prices have been rising on the back of the fact that the material is still somewhat discounted. So if you're asking me how high can spot go, I guess spot can, sure, it can go to quite a number, but that doesn't mean that the average price, is anywhere near that number. And
you're an Albemarle investor, a Livent investor. I mean, Livent stock is well above its IPO valuation, and at its IPO, it was generating 200 plus million of EBITDA, and it's still trailing, is producing, I don't know, 30-40 million, EBITDA. So is Livent and Albemarle going to be able to achieve $20,000, $25,000, $30,000 prices for their hydroxide and carbonate tons?
Yeah, well, I mean, and that's I guess that's the interesting point. So I think the point to make is, yes, I think, carbonate spot prices, are higher, but at the quarterlies, again, when you listen carefully to what the CEOs are saying, the Albemarles, the Livents, and to a large extent the Ganfins, because they are an exclusive club that is qualified into the hydroxide market, And the fact is, Paul Graves was sort of intimating that the newcomers into hydroxide weren't getting as qualified as quickly as people thought. And he thought that there was a fair chance they could pivot back to carbonate, certainly where spot prices are. So if it is effectively a much smaller oligopoly of producers that deliver into the hydroxide market, then they have to some extent a better pricing power. And they've said that's kind of where they want to focus, because there's less volatility and they see what they need to see. Now, we know Albemarle goes for 2 times WACC, and what is weighted average cost of capital for them? I don't know, let's call it 8.5. So 17 is a sort of hurdle rate to put something in production. They achieve that rate at well below 20 because they have good assets. So they are going to renegotiate, and I guess, what can they negotiate to, I guess, is we shall see. But given the shortages, my guess is that they are going to be north of 20. I don't know how close to spot they're going to be able to put off, because remember, they like to sign term contracts. Right? So I think for someone like Albemarle, I think their preference would be something that justifies and leaves them a dividend aristocrat and leaves them secure to be able to keep ratcheting up each quarter their dividends. So it will be interesting to see, but as an overall preference, they prefer, and love and prefer, I think for different reasons, prefer the lower volatility that hydroxide offers.
It's interesting. Albemarle raised money early last year, and so did SQM and Livent. I forget exactly when they did it, but their valuations were much lower when they raised that capital. But why haven't they raised, a lot more capital to consolidate? There's a lot of newcomers coming in, and Albemarle does have a lot on its plate. But Livent, is really only in Nemaska. They haven't really changed their strategy at all. Tangshi is paying down debt. They've been much of a turnaround, so not looking necessarily for massive growth from them. Ganfeng's been aggressive, but I think these guys could be even more aggressive. There's a lot of new entrants into the space, as you rightly said. You're not seeing, but I've been thinking that Rio Tinto bought Rincon, $825 million, pretty small. Rio Tinto bought Alcan, that was like the top of the aluminum market. It was, I don't know, a $35 billion acquisition. I'm looking for that type of a moment with, let's say, Albemarle, for me to really believe that that's like a top of the market kind of situation. But then when I look at the market cap, Rio Tinto has 110 billion market cap. Albemarle has a 27 billion market cap, so they're 3 times the market cap. But I think Albemarle's EBITDA was like 500 million, compared to trailing 30 billion, right? It would not be accretive to make a cash purchase from Rio to Albemarle.
Rio is a standout in that respect, but I think if somebody else were to look at Albemarle and somebody else were to take a different approach as to how they do contract negotiations on their output and play a lot tougher hardball on it, they may be able to wring more out of the buyers and get more EBITDA.
I think so, but even so, there's not a lot of players that are trading. I mean, Albemarle's trading at a relatively rich valuation. It is factoring in, some high prices.
Yeah, but remember, there's big price uplift because they did sign some very low contract pricing in 2020, and they are expanding production. So it's conceivable if they are doubling and tripling production volumes, and they are going to double or triple their pricing, then their EBITDA could be in for a big jump coming soon.
Yeah, the market's certainly pricing that in. I'm just thinking, for them to be acquired, it would need to be another very richly valued entity, right? And
a Rivian or somebody else. I think you've obviously going to have to roll off the existing contracts. you'd have to honor the contracts that you have, but you could then take your expensive paper and accelerate into, I guess, new projects if you have the management bandwidth.
I think it would be hard for for Albemarle shareholders to accept Rivian paper, but I think it would be hard.
It's liquid,
for Albemarle.
so
I think it would be. I could be wrong, but I think it would be a lot harder for Albemarle shareholders to not take Tesla paper.
It makes complete and perfect sense for an overvalued, non-earning EV OEM with a massive market cap to secure themselves the downstream rather than signing what I call these fugazi offtakes that don't really exist, in my opinion.
I think it would be great if GM or Ford were to take over Albemarle as well, right? But on the relative market cap, Albemarle is trading at half the valuation of Ford and GM. Tesla is trading at a place where they're in production. They're consuming tons of they're consuming the amount of tons of lithium that Albemarle can produce, right? So owning them would give them a very long-term sustainable competitive advantage to have Greenbushes and Salar de Atacama and all the Wodgin and all the growth that they have, and just sell the bromine and sell the catalyst business. They could afford to do it.
Yes, but then I mean, I guess we back to that old chestnut is you then take on the ESG mining, the whole responsibility of that front. So everyone comes to chant and bang something loud at your front gates when you take over the mining part of it.
That's true, and that's probably in Chile. That's a real risk for Tesla to take. In Australia, less of a risk, but they also would have a lot of Chinese conversion for sure. But again, Tesla, and we just saw it in Sarah Marisol in this article in the New York Times, and talking about what they're doing in New Caledonia for nickel, right? If anybody can make mining okay and green, it would be Tesla, right? So
yes, and they're taking on project by project, but taking on a company would be different. But all I guess we're agreeing on is on a valuation basis. The logic is they have high enough valuations. A lot of the EV OEMs, the new ones, have high enough valuations that it makes sense that they should be buying upstream assets.
There needs to be more vertical integration. I've written here, like, as lithium has gone vertical, to solve that, there needs to be vertical integration. You've seen some people exiting the cathode business. Johnson Matthey has had difficulties. Umicore, has joint ventured with Volkswagen. They've had some difficulties, but I think there could be cathode consolidation. Will battery companies take them over? OEMs take them over, or will they, integrate, with lithium chemical companies? We shall see. My eyes very much are on Ford and SK Innovation. You haven't seen either of those names show up in any offtakes of any type. And they're overdue, and they have very big ambitions, in particular in the US. So I would look to them. I'm looking at, also at Redwood. GM cut this deal with MP on rare earths magnets. Will they go all the way upstream? You're right, there's a fear on that, but I hope over time that the anti-mining worry dissipates, and people recognize that mining is absolutely essential for this EV future, and the image of mining will improve politically and among a number of the auto OEMs.